Hey folks, how's it going? This is Kevin de Toit with Legends, and I'm having a repeat guest because I love him, that's why. And I'm calling this Mortgage Talk with Ted. It's his title, but I'm calling this episode Mortgage Talk with Ted. We're going to go over the real estate industry. Ted's a master at numbers. Can I say that?
You can say that. Go ahead, say that.
Absolutely. You've lived real estate your whole life. I mean, he knows financing like the back of his hand. I'm at his house today. I came to grab some nice fancy... Cheers, buddy. Cheers. This is nice iced tea with a little spice in there and Ted style, our Greek legend. Today we're going to go over the mortgage industry, what that looks like, where it's going. I've got some questions for Ted, so let's get this started. Before we do get into this, subscribe, hit the like button, crash the bell so you get notified every time I have a video coming out. And let's get started. Boom. Mr. Ted. Ted, coming from the real estate side, my concern is I see the news, I see media, I see the papers, I see online posts. This forbearance, 4 months of rent hasn't been paid, so now we're at the $21.5 billion mark of, money's owed to, landlords and so forth. I don't want to paint a doom and gloom scenario, but tell us, what does it look like from you knowing the number side of real estate?
Well, you're seeing a unique time where we have to try and clairvoyantly predict what's coming next. So what is coming next? Stimulus package is coming next. So is that going to create inflation down the road? Probably. But is it necessary? Absolutely. In California, you have a very difficult time as a landlord evicting someone who doesn't pay rent. Right. But your forbearance only goes for 6 months. But yet you can't kick a person out if they haven't paid for almost a year. So is that going to come home to roost down the road? Quite possibly. But it's not all doom and gloom. It wasn't that long ago we were driving down the freeway at 80 miles an hour because we could.
I never do that, Ted. I never do that, Ted. Never,
But the bottom line is, today, we're driving down the freeway a little slower because there's more cars on the road. Little by little, slowly, things are coming back. And I have a very optimistic view of how this is going to turn out. I think our darkest day may not have come yet. I think we've got a little more pain and suffering, but there's a vaccination that's close, and we're going to start to see forbearances perhaps increase a little bit, but then they'll slowly start to decline as people get their jobs back. Some jobs will never come back. Right. People are going to have to adapt. We have a client right now who is in the process of getting licenses for drive-in theaters. Now, I'm dating myself.
Oh, wow. But I just saw this in Ventura.
I used to go to drive-in theaters.
Me and my wife drove the other night from Santa Barbara, and there were all these cars, and they had a 4-screen movie theater in the parking lot.
So the fact is that whole industry is going to change. People are a little nervous to go into a theater and sit next to someone that they don't know that perhaps might make them sick. Right. So consequently,
even a sneeze is a concern, and it's just a sneeze.
Right. So my point is that the mortgage market rates are at all-time lows, but you have to be qualified. Right. The creme de la creme are going to get the best rates. If you've got any chinks in your armor, your rate's not going to be quite so good. A lot of self-employed people are realizing that getting a mortgage loan today is not as easy as it was. But what's very interesting is watching the mortgage market adapt to this. Non-qualified mortgage loans never really went away. They were hiccuped for a while, but they're still here. People can still do bank statement loans. People can still get co-signers. They can get gifts from relatives. And there's no reason why people should not buy real estate.
Right. I'm hearing a few things at Ted. So there's like what Ted's saying is there's actually quite a few solutions coming up, which I like actually. So Ted has quite a positive look at this. So first of all, there's going to be a vaccine. There has to be. So that we know that's coming sooner or later. When they have it, they'll let us know. Second of all, Ted's saying it might be difficult right now for a mortgage. However, there's still opportunity in a sense that there's going to be more creativity going on. And also, it might actually be easier to get a mortgage because we have to exchange money. Money has to exchange hands.
Yes.
So even though it's a little bit tough right now because of circumstances, I believe it will actually get better from what I'm hearing you say.
I think
it kind of makes sense. It makes sense.
Yeah, I think eventually. I don't think the dramatic effect of this pandemic perhaps would have been quite so overblown if it was not for it happening in a presidential election year. It's not about politics. It's about reality. The reality is when something happens during a presidential election year, it has a little bit more of a microscope on it.
Yeah.
So you know, I've been doing this since 1980, not 1880, 1980. So I've seen some changes.
Yeah.
I've seen some changes, and we're going to see some more.
Yes.
But I will stick with my story that once the darkest day has passed, and I don't think that's too far down the road, the recovery will be much more dramatic than.
Okay.
Than
I see what you're saying.
predicted.
Very nice. Yeah. I like that. Yeah.
2007 and 8, that financial crisis created modification. Modification, you had to prove that you were worthy. So 44 million Americans didn't make a mortgage payment on time. That retarded the recovery because all these people are walking around with late payments. They couldn't get into future mortgage loans. The recovery lasted 7-8 years.
Right, absolutely, yeah.
Well, this time around, lessons were learned. No modification. It's forbearance. You don't have to ask permission. You don't have to prove that you're worthy or that you're in distress. So a lot of people are in forbearance right now, and their FICO scores are not being affected, and they're going to be able to recover quicker. There will be a price to pay, though. So for those people watching, if you don't have to do a forbearance, don't do a forbearance. Because in the future, underwriters are going to be asking for 12 months copies of canceled checks, proving that you made your mortgage payment. So even though your credit report looks spectacular, you're going to need to prove. So there'll be pain and suffering. But
it does save you though. So for those that they're unemployed right now, and sometimes there's two famous unemployed, so they're supporting their household, they don't have a job right now. The unemployment can only literally maybe buy groceries and pay for gas.
Right.
The benefits are running out at the end of this month. Well, actually last month, so that's kind of at its end.
Right.
There's no more other plan for independent contractors to have that other benefit besides unemployment. So at least what I do like to hear is that it's not as dreadful as it was before, because we're all a part of that. The nice thing what Ted is saying as well is he's been through many cycles. He's seen it all. Ultimately, you just have to go with the flow.
You do.
And you have to transform. You have to merge with it and go with it because you can't beat it. You don't own it. You don't rule the world.
Right.
Ultimately, what it does do, it actually creates opportunity. We have to be smarter, more sophisticated. We have to be more balanced in life.
Sure.
And these are all lessons to be learned. And they're tough lessons. Yeah. I mean, good and bad. Life and death. Ted, let's please talk about interest rates. And let's talk about the present and where you see the future. I'm talking the next 6 months. What that looks like, help us understand what that really means for us, Ted.
Well, interest rates are at all-time lows right now as we sit here approaching the beginning of August. 6 months from now...
What are they? What are the interest rates right now, Ted?
For a qualified borrower, 2.75 for a 30-year fixed, 2.5 for a 15-year fixed.
I've never heard of that before.
It's because it never happened before.
Oh, okay.
This is it. This is the lowest point that we have seen in history.
Okay.
And so as far as the next 6 months are concerned, I don't think you're going to see interest rates dramatically jump. But I also don't think there's a lot of room left to go down.
Right.
There's 3 reasons why. One, they don't have to go down. People are buying houses and refinancing. Volume is high, so why go down? Right.
And also investors are buying as well. So I mean, it's buy, sell, invest. That's what's going on right now.
Capacity. The lenders are completely swamped. That's the second reason that I don't think you're going to see interest rates take dramatic drops, even though the cost of money might go lower. But the third reason is forbearances. Every lender who's writing a mortgage loan today has to worry that might be the person that doesn't make those first 6 payments. So that
sounds like actually thinking in your head, which is good. That's good. Yeah.
So 6 months from now, I don't know if they're going to be as low as they are right now, but they're not going to be dramatically higher.
Can you explain to us, please? I know forbearance, but even my wife asked me to explain, and I kind of tell it to her, but let's hear it from an expert. What is forbearance?
Forbearance is basically taking mortgage payments, whether it be 3 months or 6 months, and putting them down the road. It's just a stall. It's an as agreed stall. Lender agrees because they have to, because the federal government says you have to agree, and the borrower agrees not to make a payment. Lender agrees not to hit them for not making a payment. So forbearance can either be 3 months or it can be 6 months. It can be 3 months and 6 months, where then at the end of the 3 months or 6 months you have to pay it, or you can
The full amount.
Either that or amortize it. Sometimes they'll let you amortize it
at the end of the loan.
Yeah, or they just literally take it to the end of the loan.
Okay.
So, 360 months in a 30-year mortgage, well, now you got 366 months in your 30-year mortgage.
Absolutely.
That's a forbearance.
Exactly. So there is a benefit.
Yeah, and the benefit to the borrower is
Yeah.
it's not going to ruin their credit. The benefit to the lender is that they aren't going to have to foreclose.
So in business, retention is very, very important, because retention is that repeat business, and luckily they've given us some assistance, the loan division of real estate, to help us get through these times, because nobody saw it coming, of course, so we couldn't prepare.
You can't predict.
Yeah,
this.
absolutely.
Yeah,
this is something that
we had the best economy in our history, and then all of a sudden, with the blink of an eye, it all changed.
But Ted, isn't it amazing? Isn't it amazing, Ted, how we come through resilient, how we come through. There's so much opportunity created right now. I mean, there's so much. People they've had to morph into other ways of doing business, virtual video conferencing,
Sure.
online. So for me in order to show a home, is I'll actually go and I'll film the home, cut together a video, and I send it to the client. So before I never did that.
5 months ago, I thought Zoom was when you drove too fast.
Now Zoom's everything.
Zoom was everything.
Everything. I was on this morning, Ted, because you love this. I was this morning on with Keller Williams International head office in Austin, Texas. I was on with some of their big players in luxury, talking about their technology, all Zoom. So of course we create our own technology, but here's Keller Williams, the largest real estate company in the world, using a third-party application to broadcast their message.
It is remarkable the changes that have had to be made.
And then also now, it's going to accelerate the food delivery. So now we have I went to Cane's. Don't tell the wife, she loves Cane's. And it was fast. There was a line of cars, Ted, but I walked in, I didn't even wait for 5 minutes. So they're getting ready. There's not this waiting anymore. There's not really a sense of urgency, but I think things are getting more streamlined. People are realizing that they can cut the fat off.
Yeah. I think a lot of companies are realizing that those huge buildings with all that square footage where you were going to put all those people don't need it anymore.
Right.
Because they're realizing that people are actually more productive at home.
At home. So in commenting what Ted said, that is true. A lot of companies, they say when people return to work, they're going to be up to 75% capacity. So that means 25% are going to stay at home. They're going to work remotely. You know what I mean? Whether it's a virtual office or their home or whatever it may be. Because a lot of people, LA, and I'm in Los Angeles. It took me like 2 hours to get here. It's a commute. Everything's a commute. Even going to your office down the road for you, Ted, it's a commute. It's traffic, it's lights, it's people.
We've tracked the production of our processors, our underwriters, our funders, and it is remarkable how many more loans they can produce in the same amount of time because they are not getting in their car and driving. They're at home. Whether their commute was 20 minutes or 40 minutes or an hour or 10 minutes, the fact is now it's 0.
Got it.
And they don't stop at Starbucks.
I was about to say, on the way they pick up coffee. On the way home they go to the store. Yeah.
No, they're working, and so it's a fall forward. We're falling forward in many respects. Many of the processes that we use to get a loan from the beginning to the end have now been streamlined because they've had to be.
Right. You didn't have a choice, guys. This is Ted Learakos. He's in Orange County, but you do LA. You can do anywhere, really. Yeah. He works for my favorite mortgage company called United American Mortgage Company. I've been working with them since 2014. I'm talking Lee, Jessica, German, Tommy. Yeah, Tommy over in Long Beach.
Yeah, of course.
Of course, you, Ted. And then, who else am I missing?
Well, we've got Scott Dormeyer. We've got Santino.
Vance. We've got Vance. And Ted has literally the best personal assistant in the world. A shout out to Alita. That is But you don't let go.
No.
That is the best personal assistant in the world. Loyal, dedicated, smart. Oh man, there's so many good things I can say about it.
How has she lasted with me for 15 years? I guess that's the question.
Absolutely. Well, guys, thank you very much, guys. Ted Learakos. I will put his details in the description box below. Do me a favor, please subscribe. I'm building my channel. It helps with the analytics. Hit the like button because YouTube loves that. Comment. If you have any questions, by the way, reach out to Ted. He's a super nice guy, very approachable and very knowledgeable. And guys, you've done it all. From big jumbo loans and the multi-million dollars to the small condo. I mean, Ted, you've probably seen it all, man.
I have, and I appreciate the plug.
Thank you.
Thank you so much.
Thank you, guys. Cheers.
Right.